All right, so I'm the economist. I'm supposed to give you the broad view of the state's economy. So the bad news is you have to listen to an economist. The good news is I have exactly 12 minutes to speak. They say the definition of an economist is someone who's good with numbers, but doesn't have the personality to be an accountant. So now I have 11 minutes. So I'm going to give you a broad view of the state's economy. If people from outside of the state of Texas was probably looking forward to see what happened in Texas this year, I think many thought that the state's economy would go into a sharp recession, given a big decline in oil prices that has occurred, and the perception that the growth in Texas over the last 4 or 5 years is mainly due to oil prices and the expansion of the energy sector. And that has played a big role in Texas' strength, but not the only role. And the state's economy slowed quite sharply. Around mid-year, oil prices leveled out at about $60 per barrel, and things were looking pretty good. And then, obviously, recently we've had a further decline to about 45. So we know in the oil and gas sector another shoe is falling, but I still am expecting, and my forecast is still predicting, that the state's economy will maintain positive job growth for the remainder of the year. So overall, the state's economy will have very mild growth of about 1%, but positive nonetheless. Quite a bit different than the 1980s. And of course, you in Houston here know what happened in the 80s when you had significant declines in energy prices. And while things have weakened quite a bit, it's very, very different than the 1980s. So that's my kind of overview. Now I have 10 minutes left, but I'm going to go through a few slides here. So if you look at the expansion from the recovery from the Great Recession, Texas has done better than most states. For every year up until this year, we're in the top 10 states in terms of the job growth rate. And some of that story, as I said, was energy. Some was construction, not so much driven by energy, but construction didn't get out of whack as it did in many southern sand states where they had these housing price collapses. We didn't see a housing price collapse in Texas. We had our little housing fiasco in the 80s, and we had some restrictions on mortgage lending that helped us not go through that again. And besides, our prices, because of land availability in the state, don't swing as much as other places. So we didn't go through the housing crisis as much as many other states, and that helped us. And then exports. A lot of people don't think of Texas as a big manufacturing state. We're really not. If you look at manufacturing as a share of the economy, we're about middle of the pack in terms of states. But if you look at exports, we're ranked in the top 10 exports states in the nation. The Census Bureau looks at jobs tied to exports as a share of total jobs, and Texas certainly in the top 10. So exports is big here, and exports from Texas have grown much more rapidly during the recovery than other states. And a lot of it comes from the Gulf Coast and Houston, and a lot of it's petrochemicals. We've had very good years in petrochemical exports. So last year was a strong year in the state's economy with broad-based growth. And then oil prices peaked in mid-year at about 106, and then they declined to the end of October last year. They were down to about 80. So people ask me, what impact does the decline in oil prices have on the state's economy? Well, that's a classic example of an economist's answer. I'd say it depends, because it depends on where they drop to and where they drop from and where they drop to. The drop from 106 to 80 didn't have any negative effects on the oil and gas sector. They continued to drill. Most areas of the state that are drilling still make pretty good money at $80 a barrel. Consumers got a little break in their spending on gasoline, and the oil and gas sector didn't slow. So initially there was a positive impact on Texas, and then after 80 it went down past below 60, about below 70, and then we had very negative impacts. So obviously the decline in energy prices has been pretty brutal in many areas of the state. Plus, we have a very strong dollar, and the dollar plays a role, too, on manufacturers. Like I said, we export a lot, and that's been also a significant challenge to the state's economy. So the bottom line is I expect job growth to be about 1% this year. After growing 3.6% last year, it'll be the first time in 13 years that Texas job growth has been below the national average. Yet Texas is going to do relative to what we did in the 80s and relative to other oil and gas states. So if you look at this chart, it's job growth. Last year in 2014, you see Texas was the third fastest growing state. And everybody knows what that is on the left. That's ND. That's not Notre Dame. That's North Dakota. Similar in size. But anyway, you can see last year there was the oil and gas states' growth was kind of spread out across the country. The first several years of recovery, all of the oil and gas states were to the left. But last year was less about oil and gas, even though prices were high. But Texas, once again, was the third fastest. Now, if you look at this year, so far this year through August, which we have data for, you can see the oil and gas. North Dakota is the second worst performing state after being the strongest last year. And these other states on the right-hand side, which you cannot read from where you're sitting. This speech is sponsored by the local optometrist club. Okay, so you can see over here on the right is Alaska, Oklahoma, New Mexico, Louisiana. Those are the oil and gas states, and you can see Texas, while it's only 32nd fastest growing state this year, is doing much better than the other oil and gas states. Let me see, how much time do I have? 5 minutes, I'm doing pretty good. Okay, so if you look at sectors in the states, different sectors in the state's economy, this is job growth. We use job growth a lot in states instead of output growth simply because we have the data. And the data is pretty good for Texas. So if you look at the left-hand side there, your left is the energy sector. So you can see that job growth in the energy sector was very, very strong. Over the last 4 years. This is from 2012 to 2015. And then this year, jobs in the oil and gas sector are declining by about a 16% annual rate. So everybody knows that there's been big layoffs in the oil and gas sector. Other sectors that have slowed have been construction. A lot of that has been in Houston with the really more about the uncertainty about what the oil price will do to the MSA's economy than about actual impact. But anyway, so construction is slow. Manufacturing is way down. Some of this is because our manufacturers produce a lot of stuff for the oil and gas sector. Equipment, fabricated metals, those types of manufacturers produce for oil and gas. Plus, we had a very, very sharp increase in the value of the dollar, which means that the products we sell internationally have become more expensive. So manufacturing has weakened. We've had a little weakening in finance, insurance, and real estate, but there's several sectors that are important to the state's economy that actually have picked up this year. And that's growth in leisure and hospitality. We're seeing consumers have more money in their pockets and are spending more in terms of hotels and restaurants and such. And then health and education. So health and education is a broad sector, but it's mostly health because public education is in government. So healthcare has actually been expanding this year after several years of weakness because of all the uncertainty surrounding the Affordable Care Act. We're starting to see expansions in healthcare. So these are several sectors that are helping offset. But overall, once again, we're seeing positive job growth, but very much divergence across the sectors. The manufacturing sector, as I said, is weakened. We have a manufacturing survey that we do at the Dallas Fed, and we look at production and orders and the company outlook. Starting earlier this year, those things went into decline. Whenever the lines are below zero, means that more respondents are saying declines and increases. So I got 2 minutes now. Those 3 minutes went pretty fast. So there was starting to see some improvement in mid-year, and then the dollar spiked up again. Oil prices fell. and now we're seeing weakness in manufacturing again. If you look at our exports, this is the Texas value of the dollar, which is not a dollar with Sam Houston's face on it, but it is the weighted toward countries we export to, and it's been very strong, just like the U.S. value of the dollar, and our exports have come down somewhat. There was some pickup toward mid-year, but I think we'll see some weakening once again. If you look at the oil and gas sector, we've seen big declines, as you know, and this blue line is oil price, the red line is the natural gas. You see the rig count fall by about 2/3, and then starting to pick up near mid-year, but now with the decline, the rig count is beginning to fall again. So which metros in the state are performing best? This chart says a lot. This is the share of jobs in mining, which in Texas is mostly oil and gas. And you can see that Midland, Odessa is at the bottom. But in terms of big cities, you see Corpus Christi and Houston at the bottom. Houston has been able to maintain about 0 job growth so far this year, which is pretty darn good considering the decline in the oil and gas sector. Dallas-Fort Worth is doing better, and Austin is doing the best. And you can kind of see the ranking based on the share of the energy sector. So if you look forward to what's going to happen in the state's economy, you can see that the leading index that I have has been declining. It went up for a couple months near mid-year, and now it's beginning to decline again as pretty much broad-based indicators are showing decline. So in summary, the Texas economy weakened in the first half of the year significantly, but remained positive. Toward mid-year, we're starting to see some signs of improvement, but oil prices and the dollar both changed quite sharply, and we're going to likely see continued weak but positive job growth, less than 1% for the remaining months of the year. But if you look back and compare us to what happened in the 80s, or you look at us compared to other oil and gas states, we're doing quite well. Continued growth in healthcare and leisure and hospitality and other industries and other areas of the state. Austin continues to grow very fast. Dallas is doing well. And this year we'll see about 1% job growth, and my time is up. Thank you.